Hi Tenafly, this is your real estate monthly market update. Everybody's asking me what's going on in the market right now. Tenafly is hot, hot, hot. Prices jumped and the bar got higher. So home values in Tenafly surged this year. Inventory is tighter than it was before, and buyers are still moving very quickly for the right homes. It's a very strong market that rewards pricing and presentation. Before we dive in, I'm Stacy Esser, your local real estate expert, and I help people like you all the time, making decisions, deciding whether to stay or whether to go. I'm here for you. Just reach out. My phone number is there. But please, no matter what, like and subscribe. We really work hard to make these videos, so I would be very, very grateful. So the median sold price jumped from 1.435 to 1.7. That's an 18.5% jump in median sold price. This is a 6-month look back. So I'm looking through March, so October through March, year over year, 6 months. Tenafly is definitely trending stronger than most other towns and way above Bergen County, although most Bergen County towns are seeing very strong markets still, but not like Tenafly. So the 18.5% jump in over 6 months does speak to new construction homes are definitely being priced a lot higher. And there's reasons for that. Number one is that essentially the cost to build houses has gone up significantly. And as new construction homes rise in pricing, so does the resale value of existing homes, right? The sale value of resale homes, that also rises. So that's what we're seeing. If we start to see the prices for new construction homes come down, then resale prices will come down as well. But that's not happening. And there are some other reasons we're going to talk about as well. So days on the market are still moving really, really quickly. We're one of the only towns where we're seeing less days on the market, which means buyers are really having to act pretty quickly when a home is priced and positioned correctly. Inventory is tighter than it was before. So the months of inventory is 1.45 months. So that's down. This is the only time where down is good in the sense that there's less inventory. However, it's good in the sense that it doesn't mean we're shifting away from a seller's market, but it's tough in the sense that a lot of people buying in Tenafly already live in Tenafly. So for people to come into our town, and I live in Tenafly, essentially sellers have to decide to let go of their houses. A lot of the moving happens inside of the town. So people move up, and when they move up, somebody else can move in. And that's the struggle right now. We don't have enough homes. So we have too many buyers chasing too few houses, and that's another reason that's pushing the pricing up. Buyers are still very active. When we look at the homes sold and the homes that are under contract, you can see we have more homes more homes sold, and then we have slightly less homes and more homes under contract. But with such little inventory, it's really hard to sell what we don't have, right? So this is the big issue here. New listings, that means how many new homes came to the market in the time that we're assessing. So when we have less homes coming to the market, and this is through March, it's really hard for more homes to go under contract, and then we're going to see less homes selling. So it's not a demand issue, it's a supply issue, and that's a big nuance there. When you don't see a lot of homes going under contract or a lot of homes selling, it's simply because there's just not enough product. So these sold numbers and these under contract numbers are just small. They're very small numbers relative to like where we were years and years ago. All right. So there is this sort of nuance that not every home is going to capture the demand. And the reason we know that is because we do look at what's called withdrawn listings and expired listings. And those numbers are up. And that means that a house comes off the market, it's withdrawn. And there's a couple of reasons why that happens. I mean, once in a while a house just comes off the market because the seller says, you know what, unfortunately, I can't sell, something happened in their personal life. But a lot of times a house comes off the market simply because it's not getting the number that it wanted. Like a homeowner basically said, hey, I am only going to sell this house if I get a specific number, and they're not getting it. So they take their house off the market. Another reason is expired listings. So when you see an increase in expired listings, that's another indication that there are still some homeowners that are trying to get a number that the market just doesn't agree with. And how do you know that? Well, you have to look at how long houses are typically staying on the market. If your house is sitting on the market longer than most other houses and you don't have bids, or you have bids that are lower than you expected, then something is not aligning with the buyer perception, right? And that's when you have to make a decision to capture more buyer demand. What can you do? So is it about preparing your house? Is it about staging your house? Is it about fixing deferred maintenance? Is it just coming up with a better marketing strategy? Is it coming up with a more robust open house schedule? It is unfortunate and frustrating when you're a seller in a market where most houses seem to be selling, and selling quickly, for above ask prices. Another reason that's happening is price ranges. If you are a seller who's listing a house under $2 million in Tenafly, you are an anomaly. There's so few homes under 2 million that those homes are typically going to sell way faster, and they're going to sell typically way further above their list price. In fact, we often see that homes under 2 million will actually get more dollars per square foot when we look at the sale price than actually bigger homes do. All right, buyers are definitely still ultimately paying very high numbers for a house. As a homeowner, use the data. Use the data to explain and to tell you and to educate you on how your buyers are thinking. If the houses are selling for above ask price by 1 to 2 points, that means that your positioning has to be very, very close, if not less than, where the market thinks the fair market value is. And that's what these numbers will tell you. Mansion tax is definitely part of the conversation. I've definitely had sellers ask if we can basically take the mansion tax and ask the buyer to pay for it. We've had sellers say, listen, the prices are rising because we are not absorbing the mansion tax, and we're going to push it back onto the buyer. And remember, that's a big number when you start getting up into like 2 million and 3 million. I mean, it's a big number even at 1%. Just to remind everybody what the mansion tax changes is essentially now all of the mansion tax is the responsibility of the seller. $2 million is a 1% tax on the total purchase price to the seller. 2.5, it's 2 million, 2.5 to 3, it's 2.5 million, 3 to 3.5, it's 3%, and then 3.5 to, oh my God, did I get that right? That's like a lot. All right, scratch that part. To remind everybody, the mansion tax starts at 1% and goes all the way up to 3.5%. If you want more details on exactly what those numbers look like, just reach out to me or put some comments below. But it does become quite a lot of money, and for the most part, the sellers are not absorbing it. They're pushing it back on the buyers. In addition to the mansion tax, the sellers also have a realty transfer tax. Regardless of price, it's 1 point. So a house that is selling for, $2 million is going to basically have 3% of fees on top of broker fees, where it used to only have $1 transfer tax. With all that said, homeowners are sitting on a significant amount of equity. So think about this. A purchase price that you had perhaps a few years ago of 1.4 may very well be our house right now. That's a 3%, $300,000 equity appreciation plus whatever your principal down payment was. So it is really for homeowners is not like whether they have equity, but it's really like, what do you want to do with it? Do you want to unlock it? Or unlock your equity, or keep it working, stay put, and you keep your lower mortgage rate. Or option 2 is you unlock it and you decide on a different lifestyle. We are connecting a lot of our homeowners to realtors in other areas in the country where they can get a lot more bang for their buck and where the taxes are just not so oppressive. A lot of times this is not just a financial decision, it's really a life style decision. We'll help you clear your house out. We'll help you get organized. We'll help you stage. We'll help you style. We'll help you do all of those things. You just have to make the decision that you're ready to move on. Or you're ready to trade up, right? So the trade up buyer has always been a huge buyer for Tenafly. That's the buyer that had bought and is taking all their equity, they're unlocking it, and they're putting it towards another house in Tenafly. Let's just talk about the rates for a minute here. So right now we're hovering at about 6.5%. That affects the inventory levels and it affects the buyers. So for the sellers, we were coming into 2026, we were hovering under 6% in rates. And then a year ago, when we came into 2025, we were essentially at 7%. So everybody was really excited that we were going to see under 6% rates stick. And they didn't. They didn't. And so how much is that affecting, the first time home buyers? Quite a lot. How much is it affecting whether the increases we're going to see from here on in? We'll see. How much is it affecting, what is the interest level of a seller who needs to get another mortgage if they want to sell? They might just decide to stick. We know that if the rates stayed below 6% and buyers, homeowners were trading in their lower rates for like a 5.5% rate, that was a lot more appealing. So we were going to see potentially more inventory shake loose, right? So inventory is the big story. It's always the big story. When inventory stays tight, that means prices still continue to rise. I mean, it's a supply and demand game. So with rates staying greater than or equal to 6%, maybe less homeowners are going to let go of their rate that they have and sell, which is going to keep inventory tight. Fewer listings, tighter inventory. So if you're a buyer looking at this market, the longer you wait to jump in, the more you're going to pay. So it's kind of like rip the Band-Aid off and get what you can get. I love having conversations with buyers when they say to me, I don't want to overpay. And I simply ask, what does that mean? You don't want to overpay. It's kind of worth what the market will say it's worth. But as you guys can see with people who are selling, some of these sellers, if they don't get the number that they want, they're just not going to sell. So it's an interesting conundrum to be a buyer in this market. I would say to you that when you see a house and that house is positioned correctly, and by that I mean the look of it is right, the marketing looks good, the condition of it looks good, you're gonna probably see that house fly very quickly above ask. And for sellers, it is important for you to recognize that even in a very strong seller's market, buyers can still say no to your house. And that no is basically going to come in the way of no bids. It's going to come in the way of not enough showings. And it's going to be frustrating because in a seller's market where most other homes are selling, to be the one that's not selling is painful. So make sure you're doing everything right and being strategic. I can tell you that you can pivot and readjust your pricing and your marketing and the condition of your house. You can do whatever you need to do to get aligned with where the buyers are. And I promise you, you will see activity fast. Thinking about your next move or any other questions, I'm Stacey Esser with Stacey Esser Group. We're here for everything you need. Please like and subscribe, and I will see you guys next month. Bye-bye.